Welcome back to the Quarterly Call. All content is for informational purposes and is not investment advice. Please consult with an investment professional. Today, we're digging into Amazon's latest earnings call, the one for Q1 2025. Think of this as getting the key insights on how the giant's doing, and maybe more importantly, what their future plans look like across the board. We've looked through all the details, retail, ads, AWS cloud stuff, and even the newer things like AI and Project Kuiper.
Exactly. It's more than just numbers, right? It gives us a real window into their strategy. We'll pull out what really matters from, well, their stores, the advertising side, AWS, which is, huge, and those longer-term bets they're making. The idea is to give you a clear sense of what's really driving Amazon right now.
Okay, let's start with the big picture then, the financials. What were the main numbers that stood out?
Well, the top line revenue hit $155.7 billion for the quarter. That's up 10% year over year. And importantly, that's excluding foreign exchange impacts. So solid organic growth.
10% is pretty good for their size. And profitability.
Even better there, actually.
Hmm.
Operating income was $18.4 billion. That's a jump of 20% compared to last year.
Wow, okay. And cash flow, that's always a big one.
Right. They mentioned a trailing 12-month free cash flow figure, $25.9 billion. So, yeah, these numbers paint a picture of, a really strong cash-generating business.
Makes sense. Okay, let's shift gears to where it all started for them, the online stores. Any interesting trends there, customer-wise?
Yeah, what's interesting is they keep hammering the basics.
Mm-hmm.
Selection, value, and speed. They're definitely not sitting still. They talked about adding new brands like Era Rings, Michael Kors, even The Ordinary in skincare, and refining their luxury side with Saks. It shows they want to be the place for, well, almost everything.
Seems like it. And I guess with the economy being a bit shaky, price must be top of mind for people.
Oh, absolutely. They specifically called out low prices as being critical. And that they backed it up with those big global sales events in Q1, like the spring sale, Ramadan Eid sale. Customers saved over $500 million, apparently.
$500 million, wow.
Yeah. And they're already prepping for the next Prime Day in July, so expect more deals.
But it's not just the website, is it? They've put a ton of effort into their delivery network.
Right. And this is pretty key. They've been really focused on making fulfillment more efficient. They talked about regionalization, basically setting up smaller hubs closer to customers.
Okay, so like local networks.
Kind of. It means faster delivery, it's less complex logistically, and it saves them money. They even changed how stuff gets into those regional centers, optimizing the whole flow.
And are customers actually seeing the benefit, faster deliveries?
Seems so. They reported record delivery speeds globally for Prime members in Q1, and the highest number ever of same-day or next-day deliveries, too. So yeah, for Prime users, things are likely getting there quicker.
Okay, let's talk about something hovering in the background, tariffs. Did Amazon give any insights on that potential headache?
It's definitely a bit of a question mark. But they said they haven't really seen demand drop off yet. There was even some thought that maybe people were stocking up a bit in advance, just in case.
Interesting. And what about prices? Are sellers passing on costs?
Not significantly yet, according to Amazon. They think maybe because both Amazon and their third-party sellers bought inventory ahead of time, forward buying.
Right. And they seem to think their model gives them a bit of an edge compared to traditional retailers.
Yeah, they made that point. Because many sellers sell directly through Amazon, they might be less exposed than retailers buying indirectly from, say, China through multiple steps. It definitely raises questions about how different retail setups will handle trade shifts.
Good point. What about what people are buying? Any specific product categories growing fast?
Everyday essentials really stood out, growing more than twice as fast as the rest of the store's business. Apparently, like 1 in 3 items sold in the U.S. now falls into that category.
Oh.
And their grocery business, separate from Whole Foods and Amazon Fresh, did over $100 billion in gross sales last year. It's massive. Shows how embedded they are in, daily life.
That scale, that sheer variety must be a huge advantage, especially when things feel uncertain economically.
Exactly their point. Having that massive selection and tons of sellers offers resilience. The idea is in uncertain times, people might stick with the familiar, trusted platforms, which could mean, well, more market share for Amazon.
Makes sense. Okay, let's pivot. Amazon ads. How's that side of the business doing?
Really strong growth there. Advertising revenue hit $13.9 billion in Q1. That's up 19% year over year. It just shows how vital Amazon has become for brands trying to reach shoppers.
And their reach is just huge now, isn't it? Not just on Amazon.com.
It really is. They mentioned an average ad audience in the U.S. of over 275 million people. That's across Prime Video, Twitch, IMDb, live sports, their audio stuff, and even extending to places like Pinterest and BuzzFeed. They're clearly working on offering tools for advertisers to reach people at like every step of the buying process. Full funnel, they call it.
Right. Okay, now, the big one, Amazon Web Services, AWS. What's the story there?
Still a growth engine. AWS revenue was up 17% year over year. That puts them on track for, get this, a $117 billion annualized revenue run rate. Just massive.
Incredible scale. And what's driving that growth? Still cloud migration.
Yeah, migration's a big part of it. Companies moving away from their own data centers, but also modernizing infrastructure they already have in the cloud, and increasingly AI. AI is a huge driver now.
And they're still signing up big new customers.
Oh, yeah. They rattle off a list. Adobe, Uber, NASDAQ, Ericsson. Lots of major players across different sectors trusting AWS.
It's kind of wild to think how much IT spending isn't in the cloud yet.
Right. They quoted a figure, something like over 85% of global IT spend is still on premises. So the runway for cloud growth over the next, 10, 20 years is just enormous. AWS is positioned perfectly.
And AI is like pouring gasoline on that fire, potentially?
That's definitely the view from Amazon. They think AI adoption will make the cloud market even bigger. And they're investing like crazy in AI themselves. Over 1,000 applications, they said, touching everything from Alexa to logistics to shopping.
And they're also building the tools for others to build AI on AWS, right?
Exactly. That's crucial. They've got their own custom AI chip, Trainium 2, which they claim is like 30–40% better on price performance. And then there's Amazon Bedrock. Think of it as a managed service, a hub, offering access to all sorts of cutting-edge AI models from different companies, Anthropic, Meta, Mistral, their own stuff too.
Making AI more accessible.
Yeah, democratizing it in a way. And they've got their own specialized models too, like Nova for speech-to-speech, and another called Act for automating web browser tasks.
And Amazon Q. That sounded like a big deal for developers.
Right. Amazon Q is essentially an AI coding assistant. Helps write code, find bugs, understand systems. They've integrated it more deeply now, so it can do more complex coding tasks more autonomously within developer tools.
The growth numbers for their AI services must be pretty eye-popping then.
They said it's already a multi-billion-dollar annual run rate business. And growing at triple-digit rates year over year. It's still early days, obviously, but that's serious traction.
And you really can't separate AI from the cloud infrastructure, can you?
No, they go hand in hand. Amazon kept stressing that. The cloud provides the compute power, the data storage, everything you need for serious AI development and deployment.
Okay, but we also heard about supply constraints. Demand for AI compute outstripping supply.
Yeah, they acknowledge that demand for their top-end AI instances, like the P5s and Trainium 2s, is very high. But they expect that imbalance to get better through the years they add more capacity. So hopefully access gets easier for businesses wanting to use those tools.
Are there other things that might make AWS growth a bit lumpy besides just capacity?
Sure. They mentioned things like enterprise sales cycles for big cloud deals can just take time, be unpredictable. And startup growth, while great, can also fluctuate. Plus, the AI landscape itself is changing so fast with new use cases popping up.
Like what kind of use cases are big right now?
Well, they talked about productivity tools, cost avoidance things, obviously large-scale model training, chatbots are huge. And recently they said there's been an explosion in coding agents, like Amazon Q. But it's still really early days. Lots more potential for new experiences, new kinds of agents.
And we should remember, when looking at percentage growth, AWS is starting from a much bigger base than some competitors.
Absolutely. 17% growth on a $117 billion run rate is still a huge amount of new revenue, even if the percentage isn't the highest out there.
Got it. What about AWS profits, margins?
They reported $11.5 billion in operating income for AWS. Strong. They did say margins can fluctuate based on investment levels, pricing changes, the mix of services people use, especially those newer AI services. And they signaled they plan to ramp up infrastructure investment again in the second half of the year, building for the future.
And that huge contract backlog suggests future demand is locked in.
Yeah, that AWS backlog hit $189 billion, up about 20% year over year. And the average remaining contract length is over 4 years. That shows strong commitment. Interestingly, they're seeing big companies renew their push to the cloud alongside getting into AI. The two seem linked.
Okay, switching topics slightly. They introduced something called Alexa Plus Me. How is that different from regular Alexa?
Think of it as like Alexa 2.0, smarter, more capable. The big shift is moving from just answering questions to actually doing things for you, more complex multi-step tasks. a proper personal assistant.
So more action, less just information. How do people get it?
It's rolling out in the U.S. first, free for Prime members, or $19.99 a month if you're not Prime. They plan to expand to other countries later this year. And they said early feedback is positive.
What kind of actions can it take? Any examples?
Yeah, they mentioned things like managing your smart home more intelligently, like setting multiple things at once, or even making restaurant reservations for you. They're adding more skills all the time, so the vision is for it to become much more proactive.
Interesting. We also heard about Project Kuiper, their satellite internet thing. Any updates?
Yeah, a big milestone there. They successfully launched their first proper satellites into orbit. They expect to actually start offering service to customers later this year. That could be huge for connecting remote areas.
And kind of out of left field, they mentioned James Bond.
Huh, yeah. Amazon's now involved in the joint venture for the next Bond films. They've brought in some big-name producers, Amy Pascal and David Heyman, to shape the future of that franchise.
Okay, back to the economy and those tariffs. Sounds like Amazon's playing the long game there.
Definitely seems that way. Their core focus stays on, selection, low prices, fast delivery. That's their anchor. But they've also been proactive, like with that forward inventory buying we talked about. And they mentioned they've been diversifying where products are made over the last 6 years or so, building resilience.
Right. So finally looking ahead, Q2 guidance. What are they forecasting?
For the second quarter, they're projecting net sales between $159 billion and $164 billion. There's a small expected drag from foreign exchange, about 10 basis points. And operating income is forecast between $13 billion and $17.5 billion.
Okay. Quite a wide range on operating income. What's driving that?
A few things. They mentioned the usual Q2 step up in stock-based compensation costs. Also, some extra costs for Kuiper launches. Those get expensed until it's a commercial service. They said current tariffs aren't a huge factor in Q2 because of that Q1 pre-buying, but
general economic uncertainty.
yeah, exactly. That contributes to the wider guidance range. Just general caution. Though they did say April trends looked positive, maybe helped by that pre-buying and strong ad performance continuing.
So wrapping it all up, Q1 sounds like, well, a pretty strong quarter overall for Amazon.
Yeah, I think so. Solid financials, good growth in retail and ads, massive investment and momentum in AWS and especially AI. Plus, progress on those longer-term bets like Alexa Plus and Kuiper, all while kind of navigating this uncertain economic stuff like tariffs.
And that core focus on the customer selection, price, speed, that seems to be the constant thread.
Absolutely. That seems to be their guiding principle. And looking forward, those huge investments in AI and cloud, it really makes you think about the long-term impact, doesn't it? How that could reshape not just Amazon, but whole industries.
Definitely gives us a lot to consider. Thank you so much for tuning into the Quarterly Call. For more episodes, please remember to rate and follow our show. Until next time, stay curious and stay informed.